Let's say hello and good morning to Vikas Khemani, President and CEO with Edelweiss Securities. Vikas, good morning. Thank you for joining us. Vikas,
what kept him busy?
What kept you busy today? Too many client calls. Business is looking good. These are good times for investment banking, isn't it?
I think it's a good time for all the participants in the capital market, whether it is investment banking, asset management. So I think I'm sure even for you guys as well. So bull markets are good for everyone.
But because the problem with the bull market and cherry consensus is that you don't get good bargains. You know, we both know this. We both know how this works in markets, that good news and good prices, they don't come together. Right now news is good, but are prices good?
No, absolutely, Nikunj. One has to be very, very careful when one invests, in the margin and what is the objective, time horizon. And definitely, if you ask my personal view, the margin of safety from a shorter term perspective has definitely gone down, given the fact that there is a huge amount of, especially what worries me is the activity level in the small cap and mid cap stocks, where you are seeing stocks kind of running significantly ahead of the fundamentals, and one has to be very, very careful and worrisome. Other than that, I think my view is from a structural perspective we are all right. Lots of positives are still in store, so there could be short-term correction which is very, very difficult to time and predict, and margin of safety, that's a kind of caveat I want to put, that is lower right now. But if my time horizon is long term, 3 to 5 years, I do believe that we will still make huge amount of money, unprecedented amount of wealth will still to be created in India. So that stays.
Because there's so much happening in the markets right now. You have Bharti Airtel, which just got a big block deal. We have a lot of demerger stories, value unlocking. It's not just the primary markets or new issuances coming in. It's also a lot of streamlining of businesses that is happening within segments, and a lot of new investor interest stepping in. So a lot of exchange of big blocks for multiple companies. If one was to look at value in the market, where would one find it at this juncture? Do you think it's really in these demerged entities or some of these index heavyweights where blocks are being exchanged? Where would the value come in? At what point?
I think obviously it becomes difficult to find value in this kind of market, so you have to look for different kind of themes and different kind of opportunity. I think you have to be in a structural opportunity space where I think growths are there, and we've spoken multiple times, financials, construction, all those things are structural opportunity space, and I think within them there are lots of ideas possible. One of the things which one has to be look, in my opinion, where the operating leverage is possible, and especially companies where a little bit of combination of both operating and financial leverage is still possible. You might find great as the environment turns around, as the activity picks up, as the volume picks up, and there are many companies in construction space in that. There are many companies in the sectors which have been kind of holding on so far and waiting for turnaround, and you are finding many such opportunities. In aviation there are opportunities, in agri space where there are opportunities where the capex is done, investment is done, and as the volume growth picks up, as the things are looking at, the operating leverage will kick in huge, and that is the one theme I like. And that again, from an opportunity identification perspective, I feel this theme can run across many sectors. And if you see lots of stocks which have done well in this theme in the manufacturing space in the recent past, I mean chemical being one of that in last 3-4 years, many such other sectors, sub segments should be looked at. But I do believe when the economic turnaround happens, your lot of sectors which are ready with capacity starts turning around, and then you start sort of seeing operating leverage kicking in, and that is the one theme I really like a lot, and I'm looking for where the capital is spent, gross block is done, and operating leverage or earning power is just happening. And I look for those ideas.
Affordable housing is a theme that you've been talking about for the last 1 year. But the other theme that you think is going to be beneficiary at this juncture is insurance. The sector is just about opening up with a slew of fresh paper as well coming into the market. Within insurance, is there anything specifically that you like?
I mean, we have HDFC Life issue closing today. We like that a lot, and it's again great name. From a pedigree perspective, business model perspective, growth perspective. So I think insurance is a one space which is again, in my opinion, from an 8-10 years perspective, one can look at it to create huge amount of value. I mean, I like financial in general. I have said multiple times, and I think the financial penetration in this country is still very, very low. We have over next 5-7 years, this sector will look very, very different than what it is today. Lot more new players will come, lot more segments will come, new business models will get created, and as you rightly said, yes, insurance is another theme we like at this point in time, and today is the opportunity to invest into IPO of HDFC Life, which is closing today.
Which way should one lean? Because we keep on debating this question, and I get different answers from everyone. My standard question is, should one buy life, non-life, or reinsurance? And trust me, if I ask 3 experts, I will get 3 answers.
Again, so every business model has its own nuance, and every business model has its own growth profile. Life insurance business, I mean, and their two trajectories are different. And if you ask me, I would prefer, I mean, I do not understand too much of reinsurance, so I will probably not comment on that. And I don't think, even the current setup is also sort of ready as far as, because the competition from foreign players is still high. I must say I don't understand that segment. But within general insurance and life insurance, I think both are reasonably good. General insurance, lot more, scope for penetration, lot more scope for product innovation, lot more scope for, if you ask me, opportunities, penetration is far, in my opinion, more than even life insurance. Life insurance sector has matured over last, as I said, it has been relatively matured as compared to GI. But I do believe that both segments, will do very well over next 8-10 years, because in both segments we are significantly under penetrated, and new product innovation, new ideas will come in those segments, and so I remain bullish on both these segments.
Vikas, so good to have you this morning with your insights on the markets. Really appreciate your time and your thoughts. Thanks very much for joining us. Have a great day.